All right, today we're going to talk about why most of our investors enjoy boring, basic investment opportunities that generate consistent returns. I'm a boring and basic guy myself. This is my type of investment vehicle. I don't need anything flashy or sexy. The more boring and basic it is, the better I can understand it, the more likely I am to invest here. So this is our daily parallel brief. We do these financial investment topics on a daily basis. Just 2 to 3 minutes. This is not financial advice. This is not investment advice by any means. If you are looking for that type of advice and seeking that, go somewhere else. It is not here. So most investors in our credit fund, and we have a real estate debt fund or hard money lending fund here in Texas, where we lend primarily throughout Texas and DFW. Most of our investors enjoy a boring, basic return. Our model is very easy and to understand. It's very boring and basic. It's just loans that we lend out, and the house acts as the hard asset or the collateral. So we lend out majority to fix and flippers or to builders who are involved with a ground-up construction project, and maybe they do 5 or 10 or so deals a year. So our returns have been, in double digits, 10 to 12 ranges where we typically lie, which is going to be boring and basic by most people's terms. So we're not a big, sexy fund. We're not able to generate those high returns. But for me and my personality and where I am, that's enough for us, and I'm a very boring and basic guy, as we mentioned. So we tend to attract investors who are in seasons of life where they aren't chasing a big return. There's certainly bigger returns out there that do a wonderful job. We just tend to stay in our lane, lend on what we know, lend on what we understand, and that tends to produce these type of returns. And we really try to protect our downside. That's our number one key in underwriting any deal that comes through. We protect our downside, and doing that, we tend to have boring but consistent returns over and over again. So that's what I prefer. Even when I'm looking at other, asset classes I may dabble in, I've done some other aggressive investments that haven't turned out too good. So may have been burned a little bit, been scarred a little bit. But so right now in this season of life, I prefer a boring and basic investment model, just kind of like myself, my personality, and we tend to attract those type of investors that are in seasons of life where they want something boring, they want something basic they can understand, to diversify from wherever else they are investing. We do have investors that enjoy that, higher risk, higher return type investment, but they've chose to allocate some of their capital in a more maybe lower risk investment vehicle like the debt fund that we have. If you like this type of content, we put out videos like this every single day, 2 to 3 minutes. This investment financial topics. Again, today we talked about why most of our investors, me included, prefer this kind of boring, basic model. If you have any questions, comments, please feel free to comment below, like the video, share, subscribe. This is not investment advice. This is not financial advice by any means. So if you're looking for that, go somewhere else. We are not qualified to do that, but we enjoy talking about what we see on a daily basis running our hard money lending fund. So again, like, share, subscribe, all that fun stuff. It helps us grow. We'll see you next time. Peace.